Happy Thursday. This is a weekly update on my $500,000 portfolio that I'm trading to $5 million. What a week plus 1 day since my last update. My total gain of $2,000 over the last 6 trading days belies the roller coaster we had during those 6 days, which includes 3 straight down days punctuated by the Dow dropping 700 points on Monday, the biggest drop since last year, followed by 3 straight days of rallying. This portfolio actually hit an intraday low of $520,000 on Monday, down over $30,000 since my last video, before rocketing back up to new highs on the strength of the tech rebound and IWM call options I bought at close of Friday. If you panic sold on Monday when all you heard from news outlets were Delta variant and inflation derailing the stock market, and are kicking yourself for missing out on the latest rally that brought all 3 major indices to all-time highs, then feel free to click on the link I provided to watch why you should never panic sell and what you should do instead. Starting with options, my biggest gain this week is from January 2022 expiration IWM call options with a strike price of 214 that I bought at the money. IWM is an ETF of the Russell 2000 small cap index. As you may recall from my earlier videos, I've been saying repeatedly that IWM has a support level of 212 to 214 and that I would buy some IWM call options if IWM drops to 214. I bought IWM call options at close of Friday when IWM actually dropped to 214 per share. In fact, IWM dropped some more on Monday and got to a low of 211 before shooting back up to $218 at the close of today. IWM is experiencing opposing forces. On one hand, small caps are still reopening plays. However, on the other hand, concerns regarding the impact of Delta variant and inflation are pushing small caps down. I'm going to hold on to my IWM calls, but I probably would not have bought IWM calls at any price higher than $214 a share. The non-tech winners this week are AMD, which is up over 2.4%, and Facebook and Microsoft, each up over 1% over the last 6 trading days. Biggest tech loser is Netflix, which dropped 7%, including a 4% drop on Wednesday after earnings missed expectations. Other tech losers include Apple, down 1.6%, and Amazon, down 1.1% over the same period. Non-tech stocks were mostly positive. Exxon Mobile led the way, up 5%, followed by Pfizer, up 3.7%, and Lowe's, up 2.1% over the last 6 trading days. Biggest non-tech laggard is Philip Morris, which ended down 2.4% over the same period. On Friday, I sold my stock in Cigna. As such, you no longer see it on the spreadsheet. I like Cigna, but I had to sell something to fund the cost of the IWM call options. Also, my 100 shares of First Solar stocks were called away on Saturday when the First Solar put option with a strike price of $82.50 that I sold expired in the money on July 16th. First Solar closed at $83.49, or 99 cents above the strike price. However, keep in mind that I was paid $1.08 a share in premium for agreeing to sell First Solar at $82.50 if the price closed at or above $82.50 at expiration. This means that I actually made 9 cents per share, even though First Solar closed $1 above the strike price. Looking at the week ahead, I'm going to sell another put on First Solar to wheel First Solar. What this means is that I will now continue to sell puts on First Solar and continue to collect premiums until I get assigned First Solar stocks. Then I will sell cover calls on First Solar and continue to collect premiums from the cover calls that I sell until my shares are called away from me, and repeat this process. I have provided a link on how to sell puts and calls and collect premium like an insurance company. Feel free to check it out if you want to learn about writing calls and puts. Companies have been reporting earnings over the last week and a half, and so far so good. Most of the companies have beat out earnings, which is to be expected. I am more interested in learning about not how companies have performed last quarter, but how they will navigate COVID environment and how they will respond to rising inflation. I'm sticking with my prediction that big tech will outperform in the second half of this year. Let me know in the comments below how you are trading during the earnings season. And as always, thank you for watching this video, and please hit the like and subscribe buttons.